On the 29th of September, a year ago, the government introduced a blanket guarantee for €400 billion to guarantee all the liabilities of the banks in Ireland, the 6 banks, whereby €400 billion worth of liabilities in the 6 Irish institutions, AIB, Bank of Ireland, Anglo-Irish Bank, Irish Life and Permanent, EBS and Irish Nationwide Building Society. The €400 billion guarantee covered the liabilities of those institutions, and the liabilities include the customer deposits, the deposits of households and families and businesses, the interbank deposits, that's the monies that other banks outside of Ireland place with our banks, and monies that the ECB had advanced because the banks were short of cash and needed to borrow. All those liabilities, plus bondholder liabilities, that is institutions and businesses that buy bonds issued by the banks for long periods of time. It could be for 3 years, 5 years, 10 years. All those, every liability on the bank's balance sheets was guaranteed by the state. That was a panic reaction to the fact that deposits were called by deposit holders in those institutions overnight, and there was a panic fear that all the resources would be drawn out of the banks and that the whole system would collapse. And that would mean that there'd be no way for households to make their payments or businesses, wages, salaries, the whole thing would freeze. It would be a disaster, an economic disaster for Ireland. The government had no choice on that night but to issue the blanket guarantee. Absolutely they had to do it. They had no alternative but to do that. They had no idea, they had no clue of what was happening in between the banks, who was borrowing from whom, who was shoring up whom. It was a herd panic, and that was the only thing they could do. So here we are a year later. The guarantee is still in place, a further year to run. And everybody who has money at the banks is presuming, and probably reasonably so, rationally so, that that guarantee will be rolled forward substantially, if not 100% for the 400 billion, for at least 3/4 of it, I would say. That would be my judgment, maybe more. In fact, probably for another year at the full 400 billion level. And the reason I say that is because the banks are totally undercapitalised. The banks have lent over the last 5 years up to a level where the loans advanced to all their customers amount to about €400 billion. That's a huge amount of money. And in the 5 to 6 years, most recently, they advanced about 100 billion that was very poor lending, appalling lending. It was credit bubble lending. And it happened because the banks and their boards abandoned the all-important principle, the fundamental principle of responsible banking, which is called fractional reserving. By fractional reserving, we can give the example of how it happens. A bank takes in a deposit of €100. And with that deposit, it will decide prudentially, carefully, to advance €86.50 in a loan from the resources of that deposit. They keep back the reserve, €13.50. That's the fractional reserve. It's the 13.5% of every time deposits come into the bank, they hold back in order to meet the calls, because not everybody who has deposits with the bank will want their money in a short period of time. But horrifyingly, what happened around about 2002, bank boards decided that they would try and expand their lending above their resources. And instead of holding the level of fractional reserve every time deposits came into the bank at 13.5%, they ignored it. They kept no reserve, and in fact they compounded that appalling banking behaviour by approaching the interbank markets, going to other banks abroad and borrowing from them short term in order to make loans to people, businesses and people in Ireland. And those loans, as it's turned out, happened to be mainly into the property sector. So this massive expansion of credit was all directed at the property market and the property areas, and not alone to properties being developed and invested in Ireland, but also abroad, in the UK, in the Eastern European countries, in America, all over the place, to areas where the lenders could not possibly even have been able to properly appraise the markets where the money was being invested. So it was a very giddy and stupid excess stampede of credit and money into loans that have turned out to be nothing but a bubble, and it's burst. And what is horrifying is that those loans, out of the 400 billion on the combined balance sheets of the Irish institutions, about 100 billion is in that category. And the government actually, in conjunction with some of their advisors, have identified and declared that 77 billion is in fact bad loans, very bad loans. They somehow try to water that down by saying there's a small proportion of it that is income producing and can service some of the debt that is represented in that 77 billion. But in my judgment and from my experience, I would dismiss that as almost irrelevant. So the banks have a very big problem. A problem of 77 billion and probably 100 billion of collections of loans. And it's not just in my judgment or the judgment of a few other people, but even some of the most experienced and skilled agencies out there. The IMF, for instance, the International Monetary Fund, have said a few weeks ago, sorry, not a few weeks ago, in the last week, that in those economies which have suffered, which have experienced massive credit bubbles and property bubbles and asset price bubbles, the most important thing for their banking sectors and for their economies to be able to take traction again is to write down all those loans to realistic recoverable amounts. And in the case of Ireland, nothing less than a 40% write down, again in my opinion, and not just in my opinion, in the opinion of people with experience and analytical skills, is that it should be written down by 40%. So if we take just the identified loans at 77 billion and you write that down by 40%, you come up with a figure of 30.8 billion. Round it to 31 billion. And that's the amount of write down that's needed to bring all those bad loans, the 77 billion, into a collectible position, a realistically achievable collectible position. So we see that a write down of 31 billion for the Irish banking sector is required. In order to stabilise the banking sector, that amount of money is needed by way of capital injection. That's what will cause that's what will amount to the financial stability for the banks to be properly based and properly secured for the purpose of ongoing prudential banking business.